We can't do that. Only one place inflation comes from is the government. Don't forget that ever. Don't ever forget that. If you hear it came from somewhere else and you believe it, you're dumb. Remember that. If you start to believe that inflation came from somewhere else, it means you're dumb. Be smart enough to know you're dumb. Alexander says, how do you generally approach the selection of a stock? I'm reading Mary Buffett's books currently and security analysis too. I want to know something about it. You know, some of these type of questions are questions like, Derek, tell me exactly what stock I should buy and, you know, how and why and so on. Well, I mean, I can tell you why I buy some things and I'm happy to. But, you know, I don't buy and sell a lot of stuff. I like to play broader changes in the market. So when people are being irrational and, you know, foolish, it's a great time for me to be buying something. So when I can identify some point of irrationality or where I don't trust the market's judgment about the price of an asset, I'm likely to buy that asset if it's underpriced. If I believe it's underpriced and there's a good reason that the price should change in the future. If I owned an asset and I thought it was overpriced, it'd be a great time for me to sell it. So, you know, when you look at a stock and you're like, would I ever pay the current price today? And your brain's like, oh, hell no. That's a great time to sell that asset, ain't it? Good time to part company. So around that original selection is like, I don't want to buy things that I don't understand. I don't want to buy things that, you know, I need to have 50 things go my way or 10 things have to go my way. I want to buy things that are very simple, boring, and, you know, if you have some patience, there'll be, you know, a couple few opportunities per decade. You know, if twice per decade you can get a, you know, 4x return on average, you're going to be very rich. You'd be very, very rich. If twice per decade you could get a 3x return on a portfolio on average, you're going to be very rich. So I just think like that, and I don't need to rush things. I don't buy and sell stuff every day. Some people think that, you know, oh, what are you trading today? Nothing. If you want to just buy and sell, you don't make money buying and selling shit. You make money buying and holding high quality things. Just buying and selling random shit doesn't make you money. You lose money. That whole idea got popularized because the brokerage houses used to get commissions on that. You know, now they basically get a zero commission. And there's no fees for most of this. Your broker used to get paid every time you bought something or sold something. So the brokerage houses, you know, engaged in promoting that sort of thinking of you're supposed to make money buying and selling, you know, trading. That's not how money is made. Like, fundamentals have to change in the company, or something has to change in the economy that would change the asset price, you know, for better or worse. And if you're not patient for those things to happen, I mean, you're really wasting time, and you're going to lose money. You're going to waste your time and lose money, and that's like a double tragedy that it just shouldn't happen. You know, you should be smart enough and patient enough to understand, well, what's going on in the world, and given what's going on in the world, you know, what are the things that are going to be more valuable and less valuable in the future? And given that thesis, you know, how can I best position myself to be a beneficiary of those movements? And you don't have to know when it's going to happen. You're not going to know. It's not possible. It's not possible to know exactly when that's going to happen. It's like, but you got to see what's going to, you have to have a sense of what's likely to happen and be patient. And, you know, there's a study that talks about the accounts. One of the brokerage houses did this. It might be Fidelity. It said that the accounts that performed the best were controlled by dead people. The accounts that did the best, there wasn't all this buying and selling. They were just, the shit just sat there and nobody was buying or selling anything, but the portfolio that they constructed when they were alive appreciated after their death because they didn't meddle with it. They didn't tinker around with it. So be smart about that. I'm not here to be a trader. Traders are losers. Traders go broke. The thought that you're going to outperform the best money managers in the world who can hire an endless staff of, PhDs and real world practitioners of various endeavor and the best computer scientists, etc. And you're going to outperform them fucking around in your, underwear or something. So, I'm a traitor. So no, you're a loser. And very dumb. Robert says, hey, Derek, thank you for taking time to speak with us. Question that I would like to ask is, how much importance do you put in companies' history? Example would be Ford took out a huge loan before the crash in 2008. They've done the same now and discontinued their flagship electronic vehicle 150, or discounted their flagship EV 150 by an average of 10K depending on trim level. Well, people don't even want these electric vehicles. This is a fake marketing scheme pushed by the government, and the automotive manufacturers will deal with it because they're like, all right, if they're going to steal money from the taxpayer and then give us, subsidies and rebates and so on, to make these vehicles that there's no demand for, then yeah, we'll make them. But apparently that's not enough if they have to discount the vehicles further. I don't own Ford. I remember in 2009, it went down to about $1, maybe 98 cents, 96, 98 cents. I never bought Ford then. There's just a lot of risk with it. General Motors went bankrupt at that time. Ford was on its way to bankruptcy, in part because of the loan that you're talking about here. And I don't know, I just never thought it was the best option. It's probably a good company. It's probably going to be around for a long time still. They make good enough vehicles, good as anybody else's, I suppose. But I just never found it compelling. Even a dollar, I didn't find it super compelling relative to other investment opportunities. When that was $1, I could buy Las Vegas Sands for, $1.40 something, $1.50. And, if Ford went to 12 or whatever it went to, I don't know because I don't follow it closely. If it went to $12, that sounds like a great return. $1 got turned into $12, but if you would have bought Las Vegas Sands at the same time it went down to $1.38, that stock went up to $89. So that's a 60x return instead of a 12x return, which is 500% bigger return. So I just didn't think Ford was there's never been a time where I'm like, I really got to buy a Ford today. It's too good to be true. I got to buy this stock. So I don't know. You take a look at it, you make your own assessment, but I don't like it when companies have tremendous debt and they got to be able to repay that debt. Do they have the cash flows to repay it in the future? Are they going to have enough demand to have the cash flows to service the debt properly? So we got to make sure that that's all good, And then is it your best option relative to other options that you're familiar with or could become familiar with? Well, good question. Tushar says, does the government exclusively deal with the huge amounts of debt by printing more money, or are there more extensive strategies that are relevant to know about? Well, look at the national debt. I mean, the national debt when I was a kid might have been $1 trillion. It might have been less than $1 trillion. Look that up. What was the national debt in like 1980? See what it said back then. It might have been less than $1 trillion. I'm not sure. We'll find out.
914 billion.
Yeah, 914 billion. And what is it today? 32 trillion? Does that answer your question, folks? I mean, it's up 40x. Yeah, so it's up, how much is that? Is almost 40x. Almost 40x is the amount. So, 35, 36 times, 3,600%. I think that answers your question. So, are there other things they're going to do? Yeah, they're going to pretend to do other things, but it's the Fed printing money, and then there's the Congress issues more money as well, and it's a tax on stupidity. When you go print money and you devalue the existing money, it's a tax on savers. It's a brutal punishment for people who saved their money and behaved in ways that they thought were responsible. And the government punishes responsibility, and the media sure punishes responsibility. But if you don't do that, then you're going to be one of the other dummies on welfare. So you still got to be responsible despite that. And that's life. The only, when I touched on this earlier, when politicians talk bad about business people, when they're like, oh, the businesses are raising their prices. Let's think that through. Who has the sole authority to print that money? Only the government. Inflation only comes from one place. Only one place inflation comes from: the government. Congress prints more money. The Federal Reserve Bank or the European Central Bank or whatever other bank prints more money. And then there's money is less scarce and therefore has lower purchasing power, and it's less valuable. Less scarce equals less valuable. Less valuable equals lower purchasing power. Lower purchasing power means you have to pay more dollars to get the same basket of goods or the same items. That's called inflation. So only the government can create inflation. They have a monopoly on it. So when they start talking about, businesses are raising their prices and taking advantage of the consumer, no, the government just printed $7 trillion in a year and a half in 2020 and 2021. The government printed that money. Nobody else can do that. If you and I do that, we can't. We're not allowed to. We can't do that. Only one place inflation comes from is the government. Don't forget that ever. Don't ever forget that. If you hear it came from somewhere else and you believe it, you're dumb. Remember that. If you start to believe that inflation came from somewhere else, it means you're dumb. Be smart enough to know you're dumb. Inflation only comes from one place. That's the government. It's the government.
This was a great baseline and helped me build some base knowledge. I feel much more confident moving forward, scaling up my portfolio. And I recommend anyone that wants to get into real estate, definitely learn the basics, stick to the fundamentals, such as the economics and fundamentals of certain areas, why you would like to invest in an area, depending on the jobs, follow the jobs, and economic reports. Not just, you can't go with emotion at all about this. And, I recommend anybody that needs help, you should definitely seek help and learn from experts. Don't just pretend and go on your own, especially about real estate, because real estate is very highly leveraged and you owe the banks a lot of money. Thank you so much, Derek. I appreciate this course. It was a great time and really looking forward to what the future brings.